welcome, good morning. You're watching a brand new week on ET Now, and this is Market Cafe with me, Snehi Shah, and with me, as always, is Shreyansi Singh. Thanks so much for starting your day with us. And well, exciting day is lined up ahead of us because in what could cheer the markets after a choppy week, exit polls are suggesting a resounding win for the current NDA government. All major exit polls predicted a third term for the Modi government, indicating with numbers ranging from 281 to 401 seats. And interestingly enough, much of the BJP's gains are coming from the south, which was their only Achilles heel back in 2019. The poll of polls suggests a 366-seat victory. On the other hand, the INDIA bloc is projected to win about 140 seats, but the Congress has called the exit polls Sarkari data, saying that the real result will be in the favor of the opposition alliance. Parties that are not attached to either side, including the Biju Janata Dal and the Trinamool Congress, may end up securing the rest of the 40-odd seats.
Right, and meanwhile, the verdict of the assembly elections in two northeastern states was also announced. In Sikkim, the ruling SKM is set to return to power, with the party winning 31 out of the 32 seats. And the BJP has also retained power in Arunachal Pradesh for the third time in a row after winning 46 seats. Now, all eyes will be on June 4th, which is today, to find out, tomorrow, which is to find out whether it's a hat trick for the BJP or if the India bloc can spring a surprise as well. Well, let's also go across and listen into what Nikunj Dalmia, Editor-in-Chief, ET Now, is making of the exit poll outcome then. Let's take a look at what he had to say.
The headline for everybody is that there is a vote for continuity. These are exit polls, but if you look at the sum total of many exit polls, that looks like the ground reality is something which everybody can really reconcile with. I think the bigger reaction could be there in the currency market and in the bond market. Let's not when equity markets they go higher, it's great news. We all tend to get excited. But I think, frankly, the biggest story for me is in the bond market. The biggest story for me also will come in the currency market. So all those markets eventually would be reacting. Now, it's very strange if one looks at the market positioning. I'm talking about the pure near term here. The near term is that we all know that FI in the run-up to the election cycle, they were short. Domestic institutional investors are sitting on cash, and the retail positioning, at least in the last couple of days, was not all that long. So the markets may be at an all-time high, but the underlying participation in the market has not been extremely exciting. GST numbers are strong. Dow was up. So we are in for a big gap-up start. From there, I think you will see FI short covering, especially in the FI-dominated stock, looking at the data, what we have. What would be interesting to see that post-4th, what kind of inertia the markets will continue to generate on, because then the narrative would clearly move to the next 100 days or the first 100 days of the Modi 3.0. So I think that, in a sense, would be the new narrative which markets would focus on.
All right, well, Nikunj is predicting a big gap up open, and that's exactly what the GIFT Nifty is implying at 23,361.5. A gap up start indeed after the Nifty high of 23,110. So, well, let's also go across and listen into what the top market honchos, political analysts had to say on this exit poll outcome and what the consensus on the street is looking like. Listen in.
I expect the results of 2019 to be roughly replicated this time, with the BJP reaching around 300 and allies getting another about 30 to 40 or 50 seats maximum. But this time, as in 2004, the key thing is some of the key allies are not doing that well. I'm told that some of the BJP's allies in Maharashtra, Bihar, are certainly struggling. Just in 2004, I think Vajpayee's allies in Andhra and Tamil Nadu did badly. So this time it is Bihar and Maharashtra, where the BJP itself is probably struggling, is not struggling, but let's say not doing as well as it seemed to do in the recent assembly polls, is probably Rajasthan and to some extent in Haryana. Elsewhere, I think it is doing pretty well. And in the south and in the east, it is making gains. That seems to be the general trend that all the exit polls are showing. And even some of the better exit polls like the Axis My India, India Today one, are showing large gains in the south for the BJP and in the east. So I think the market will be pretty happy that status quo is good enough.
Our particular opinion poll is saying that things are going to be much the same. the Congress will be where it is, the BJP will be where it is, in which case it will be a triumph for the BJP, it will be a triumph for Mr. Modi personally. And the manifesto had basically said more of the same. It was not promising radical changes of any kind. It was saying we've done such a good job, we are going to continue doing these things. And I think that is what we are going to see. So I think that will be the case as far as the market is concerned. I think it will be reasonably happy with what's happening. There are, if there had been a sharp fall in the Modi vote, the market might have reacted badly. As things are, I think the market will do quite well. I do not think, therefore, there will be major changes in the tax rates. I do not think there will be a major change in the giveaways of various kinds. They will tweak all kinds of schemes, the Mudra scheme, various other schemes they have, the self-employment schemes, startup schemes. I mean, on all of this, there will be an improvement, an attempt to scale up, but I do not expect any radical change.
Of course, the exit poll kind of gives one more thumbs up sign towards continuity, which probably some people started questioning in the recent, last few weeks. Of course, I have always believed that, they will be between 350 to 400, and continuity is kind of given. So to some extent, you might see some short covering or a little bit of, buying, in early days. I think this will last probably 1 or 2 days, and then probably market will be back to normal. Because this is a vote for continuity, and once the initial euphoria and short covering happens, that can lead markets 2-3% higher, maybe a little bit more. But I guess then probably the market gets back to normal routine of looking back to fundamentals. And I do, of course, see one of the best wealth creation cycle in the markets ahead, and some of the skeptics who've been sitting on the sidelines probably start coming or would start coming in.
Well, all right, that's the word coming in from political analysts as well as market experts. But let's also go across and take a look at what brokerages are making out of this exit poll. Now, HSBC says we may see a strong market open today, and exit polls projecting bigger win than 2019 for the BJP-led coalition. Exit poll prediction of the NDA between 316 and 400 seats. Exit polls have removed certain uncertainties around implications of lower vote turnout and fragmented reforms. That's a word coming in from HSBC. Quickly shifting focus, looking at what Jefferies has to say. Exit poll numbers for BJP NDA are much higher than expectations. It's sentimentally positive for the capex stocks, and the entire mid space, the small and mid caps, can take a near-term breather post the election rally. Pre-election stock trend generally continues. The laggard large caps are a good tactical positioning. Potential FII reversal can favor large caps like private banks, Reliance, and they're also liking real estate, industrials, power from a long-term perspective as well. So that's the view also coming in from Jefferies. Let's also talk about what Nomura has to say, and BJP should get 305 to 320 seats, well above the 2019 mark, and the market expectation of 297 is what Nomura is saying. 2014 and 2019 exit polls had underestimated the NDA win, and they see an upside risk of this. Verdict would imply policy continuity, sustained focus on capex, fiscal consolidation, and exit polls pay way more FPI inflows. They also expect domestic sectors, particularly infra, manufacturing, and the capex theme, to outperform in the near term. Also, let's also take a look at what Axis Capital has to say this morning. BJP has retained most seats in the north and west while gaining in the east and south. The rise in vote share shows support for government policies, and even adverse results on the 4th of June, that's tomorrow, is unlikely to change the nature of the verdict, is the word coming in from Axis Cap as well.
Well, absolutely. And let's also take a look at what MOSL had to say then. And what they're talking about is that BJP may inch closer to the 40% vote share versus 37.3% in 2019. And they're also talking about how NDA is likely to touch 47% vote share versus 45% in 2019. And they're also talking about how there would be a push to reforms, the likes of UCC, ONOP, as well as farm laws. And the market focus will be shifting to fundamentals as well. So that's the word coming in from MOSL. Let's also take a look at what sectors they're overweight on, and they're talking about financials, consumption, industrials, as well as real estate that make it to their list. In terms of their preferred themes, then You do have industrials, consumer discretionary, as well as real estate and PSU banks that make it to that list. Let's also take a quick look at the large cap ideas then, and MOSL is talking about ICICI Bank, SBI, L&T, Coal India, M&M, and as well as Adani Ports, ABB and HPCL and Hindalco making it to that list. And when you take a look at the mid cap ideas then, they're talking about Indian Hotels, Godrej Properties, Global Health, and the likes of Cello World, etc. that make it to their mid-cap ideas list as well. Lastly, let's also take a look at what CLSA had to say then. They're talking about how the government will be focusing on macro stability as well as rural and manufacturing as well. And they're also talking about how the market has largely priced in a third Modi term. So that's the verdict coming in from CLSA as well on the exit polls.
Alright, well, that's a lowdown on everything that's been happening in the country in terms of elections, what market honchos, political analysts, as well as brokerages have to say this morning. But let's shift focus, talk about yet another important macroeconomic metric, and the country's gross GST collections rose to 1.73 lakh crore rupees in the month of May, growing 10% year-on-year, driven by the increased revenues from domestic transactions and the slowing of imports. GST collections had touched a record high of rupees 2.1 lakh crore last month, and after accounting for refunds, the net GST revenue in the FY 24-25 till May 2024 stood at 3.36 lakh crore rupees, reflecting a growth of 11.6% compared to the same period last year.
Well, absolutely. And as we slip into a short break, then here's your chance to take advantage of market swings. Kunal Bothra and Sanjeev Bhasin will share their stock strategies to help you navigate and make the most of volatility today. Which stocks are on their buy and sell list? If they fall or rise by 5%, stay tuned to ET Now all through the day for the best pole positions. What happened in the US markets then, and Wall Street is coming off a strong May with all three major averages notching their sixth positive month in 7. When you look at Nasdaq then, that was 6.9%, its best month since November 2023. However, the rally seemed to lose steam near the end of the month as well, and the three averages all closed May more than 1% below their record highs, even with the Dow adding more than 500 points on Friday. When you look at Nasdaq then, that fell about 1.1% last week as chip stocks including Nvidia stumbled, and those growth stocks can also be affected by moves in interest rates, which will be a key focus for investors ahead of the Federal Reserve meeting later this month as well. The first week of June is brimming with economic updates, including manufacturing data on Monday and a key jobs report as well on Friday. So that was all about US then. But also when you take a look at the European markets, European stocks closed higher on Friday, and this was largely as investors digested fresh Eurozone inflation data and its implications as well for next week's ECB rate decision. So when you look at major European bourses, you're looking at a mixed move coming in. So when you look at UK's FTSE then, that finished the day up about 0.6%. When you look at France's CAC 40, you're looking at a marginal gain coming in. And when you look at Germany's DAX, though, on the other hand, there was a slight downtick of about 0.1%. So that largely is the handover coming in from Europe and US. Snehi.
Well, absolutely good moves coming in from the American market, especially on the Dow front. With that, let's also come east and let's also take a look at what the Asian markets are up to this morning. Asia Pacific stocks are mostly in the green as of now, ahead of a private survey on China's manufacturing sector. The Caixin PMI survey comes close on the heels of official data on Friday that shows China's manufacturing sector unexpectedly contracted in May. On the back of that, let's take a look at where Hang Seng is up to. Well, 2.5% higher is where that index is. Very solid gains coming in on Hang Seng. Also, let's take a look at what Shanghai is up to as of now. And well, Shanghai seems to be the only index that's marginally in the red as of now. Less than 0.1% in the red, not doing much. So hopefully that also shifts into the green later in the day as well. Now let's also shift focus to Japan. Let's see what Nikkei is up to. It opened with an uptick of 1%, continues to trade around those levels. Almost a 400-point addition coming to that index as well. Australia's ASX 200 added 0.8% on open, continues to trade trade over there, roughly 0.8% higher as we speak as well. And lastly, let's also take a look at what South Korea's Kospi is up to, because that rose 1.7% on open, continues to be there, a 1.8% gain coming in for Kospi as well. Very strong moves coming across the board, except for Shanghai, which is nominally in the red, but not much to worry about. Shifting focus back home, on Friday we closed at 22,530. Your implied open at the top of your screen at 23,386, suggesting a gap up start of more than 680 points. Very big start penciled in for us today. Let's see if the day can sustain and hold on to these gains throughout the trading session today.
Well, absolutely. And let's also take a look at what oil had to do and what crude prices looked like. So when you look at oil prices, fell early on Monday despite a move by producer group OPEC Plus to extend deep output cuts well into 2025. So when you're looking at Brent futures they were down just about 24 cents or 0.3% to around $80 a barrel. And US WTI futures as well, you're looking at a trade coming in of about a downtick of 19 cents or about 0.3%. Around those $76 a barrel mark was where US WTI futures were. And OPEC agreed to extend the cuts of 3.66 million barrels per day by a year until the end of 2025. We'll tell you a little more about that later as well. So that is one factor, and the other factor that you have is that in the Middle East, the Gaza conflict mediators urged Israel and Hamas to finalize a ceasefire and hostage release deal outlined by US President Joe Biden. Though Israel has said that there will be no formal end to the war as long as Hamas retains power. So that was what they had to say, and Israel also said that it was assessing a governing alternative to the Iran-backed group. In fact, an aide to Prime Minister Benjamin Netanyahu also said that Israel had accepted a framework deal for winding down the Gaza war, though the aide also said that it was flawed and in need of much more work. So that is another factor that we're seeing play out with oil prices. And when you look at gold lastly, you're looking at an easing of prices coming in as investors digested US inflation report that was largely in line with estimates. However, when you look at the move on a monthly basis, bullion was up 1.8% for the month, and on May 20th, mind you, prices also hit an all-time high of 2,449. So that is the kind of move that we saw for gold both on a daily and monthly basis, Nehi.
All right, and well, let's also get going with all the events that we need to watch out for this week. It's a busy week for us. It's a busy week for markets globally as well, because today not only China, but you have the manufacturing PMI coming in from India, US, UK, Eurozone. Well, all major economies are going to be reporting their manufacturing PMI today. Tomorrow, well, the big day, the outcome of the election and the counting of votes will be taking place. 5th June, you have services PMI coming out, and 5th June is also when the RBI MPC meeting will kick off for 2 days, and 7th June is when we'll be getting that RBI MPC meeting outcome. The commentary will be very important to watch out for, and what in the terms of what Shaktikanta Das has to say about the inflation and the way ahead. Shifting focus to US, of course, today you have the manufacturing PMI. 5th June, you have the non-manufacturing and composite PMI. 6th June, initial jobless claims, trade data as well. From the UK, apart from the manufacturing PMI, on the 5th of June, that's today, and 5th of June, you have services and composite PMI. From the Eurozone, manufacturing PMI, like I mentioned today, and 5th June, you have PPI, services as well as composite PMI. 6th June, retail sales as well as the ECB rate decision, because after us, we'll be getting a decision from ECB, and that will also be a very important metric to watch out for in terms of what the policy decision is looking like. And 7th June from the Eurozone, you also have GDP data, lots of data to watch out for. And we're not done with that list, because today from China, you of course have the kicks in manufacturing PMI. 5th June, you have the kicks in services PMI. 7th June, you have trade data as well as forex reserves as well. So while all of that is happening globally, let's zoom in back home, and let's also take a look at what's going to happen on the corporate action front then. And 3rd of June, which is today, you have the Anand Rathi Wealth share buyback taking place, and the board of Prudent Corp will also be meeting for general purposes. So watch out for both of these stocks in today's trading session. 7th June, you have the Havells India AGM as well. So watch out for that. And in terms of the primary market today, you have one IPO opening for subscription, and that is Chronox Lab Sciences. Lock-in period also going to be ending for Innova CapTap, where 1% equity comes out of lock-in. So that's going to be taking place today. But well, yes, that's an entire list of all the cues you need to be watching out for today, as well as for the rest of the week for India and for the rest of the globe.
Well, absolutely, and that's a whole host of cues that you should be looking out for. But let's also take stock of what kind of updates we've been getting in. And US inflation rose in line with expectations in the month of April, offering little certainty on how soon the Fed will be able to cut interest rates. Consumer spending weakened for the month, according to the Commerce Department's Bureau of Economic Analysis. The personal consumption expenditures price index increased by 0.3% last month.
Well, let's talk about that OPEC Plus meeting that Shreyansi was talking about earlier. And OPEC Plus will extend crude output cuts into 2025 to support the market amid weak global demand, high interest rates and rising US production. The group will continue nearly 1.7 million barrels per day of voluntary cuts set to expire this year. They've extended the 3.66 million barrels per day of cuts until the end of 2025 and prolonged the 2.2 million barrels per day of cuts until September of this year. These 2.2 million barrels per day cuts will be phased out from October this year to September of 2025, and currently the OPEC Plus is cutting a total of 5.86 million barrels per day, which is about 5.7% of the global demand. So it'll be interesting to see how this pans out on Brent and WTI.
Alright, then on to some more updates then. NVIDIA has unveiled its next generation of artificial intelligence chips to succeed the previous model, which was announced in March this year. NVIDIA CEO Jensen Huang also announced the AI chip platform, and it was called Rubin and would be rolled out in 2026. Huang has pledged to release new AI chip technology on a year-on-year basis, which is faster than the company's last 2-year timeline.
Well, an online fashion firm Shein is reportedly preparing to file a confidential prospectus in London in upcoming weeks for its IPO, which could be valued around £50 billion. This move comes after the company's initial attempt to list in New York faced significant regulatory hurdles and pushback from US lawmakers. However, the fast fashion company is now facing scrutiny from senior British lawmakers who are questioning the company's sustainability and calling for greater oversight of the business.
Alright then, that was all of your global updates then. But with that, we're timed out on this segment. We'll see you on the other side with some more news and updates.
Hi there, welcome back. Thanks so much for still staying tuned to Market Cafe. You're watching ET Now. Let's talk about India's GDP, because that has surpassed all expectations and stood at 7.8% in Q4 FY24. And it is to be noted that these figures surpass the RBI's estimate of 7% according to projections made in its April monetary policy review. The full year 2023-24 GDP has been revised upwards to 8.2% from the second advance estimate of 7.6%. And the real GVA has been estimated to grow by 6.3% in Q4 FY24. What are the factors which have led to this strong growth? My colleague Prakash Priyadarshi joins us with an explainer on just this. Prakash, good morning. Take it away.
Yes, it's a positive development for the Indian economy, which seems to be growing provisionally at 8.2% in the financial year 2024. That also reflects the resilience of the Indian economy, and that shows that the Indian economy has been fastest growing major economy in the financial year 2024. Rural demand has picked up as compared to urban demand. Sufficient availability of fertilizer and increased tractor sales have maintained the growth momentum as far as rural economy is concerned. Sources are informing that the growth prospects appear to be bright. As far as Indian economy is concerned, the external factors pose a downside risk. Along with that, credit growth seems to be on upward trajectory. Domestic economic activity remains resilient, and the government is expecting the agriculture growth to be higher during financial year 2025 as compared to FY24. Along with that, when it comes to trade, the government is expecting that the strategic trade agreements like India and EFTA trade partnership shows India's commitments to expanding its global trade footprints. When it comes to a risk factor associated with the Indian economy going forward, the sources are informing that the geopolitical tension pose downside risk to the Indian economy. Along with that, divergence of monetary easing paths of major central banks add to policy uncertainty going forward during current financial year. When it comes to food prices, which is one of the risk factor to the Indian economy. Food prices at international and domestic level is posing risk to the Indian economy. However, government and central banks are taking all possible steps to mitigate this risk going forward. Along with that, elevated financial market valuations globally, particularly in US, and possible spillover effect on the Indian markets, what the sources are indicating. Last but not the least, the sources are also indicating that the impacts on sentiment and the households' finance due to rising retail exposure to stocks through FNO, one of the major concern for the Indian economy going forward, which needs to be addressed.
All right, thanks Prakash for that update coming in. Meanwhile, during an exclusive interview to ET Now earlier in March, RBI Governor Shaktikanta Das also showed confidence and said that GDP number for financial year 24 could be very close to 8%. Listen in to what he had to say as well.
To say that there is every possibility of the 7.6% growth for the current year being exceeded. I think there is quite a good chance of the growth GDP number for the current year being very close to 8%. Now coming to next year, we have given a growth projection of 7%. Other forecasters, including international agencies, have given much lower projections for next year. For next year, we stick to 7%.
All right, well, let's move on, get a little stock specific now. And CLSA has maintained a buy on Titan, but has observed that weak margins will dampen the company's strong revenue growth guidance. My colleague Winnie is here with more details on this brokerage note. Winnie, hi, good morning. Take it away.
So yes, this is mainly coming in after Titan had his analyst day meet, where certain key highlights were made, where they're focusing in terms of the growth of the eye care business by around 2,000 crores in 2027, FY27 that is, as well as EBIT margins in eye care of around 12%. But CLSA has come out with a note where they're maintaining a buy rating. They've lowered the target price to 4,270, from 4,270 to the 4,045 rupees per share. What they said is that Titan lowered its margin band by 50 basis points. They expect it to be at 11.5% to 12.5% for the jewelry business, and they believe that overall the strong revenue growth guidance is there, but was slightly dampened by the weaker margins. So overall the company seems to be well placed to benefit from the rising affluence as well as premiumization, but yes, a bit concerned about the margins, and that is why CLSA has reduced the target price.
Thanks, Vinny, for that update coming in. So that was the update coming in from CLSA on Titan. But with that, we're timed out on this segment. We see you on the other side, though, with some more news and updates.
Hi there, welcome back. Let's take a look at all the stocks that you need to be watching out for. Well, there's a lot you need to be watching out for given what the GIFT Nifty is implying as of now. But Jinnah is joining us with a quick list of all the stocks that will be in focus today on the back of the respective news flows. Jinnah, good morning. Take it away.
Well, yes, good morning. Let's start with Purvanka Limited. The company has acquired a land parcel of 12.75 acres in Thane. The gross development value of this project stands at 4,000 crores. This is acquired by Purva Oak, a wholly owned subsidiary of the company. Moving on, NMDC reported its monthly operational numbers, where the sales stood at 2.82 million tons and the production stood at 2.34 million tons. Moving on, Coal India will be in focus as company reports its May operational numbers. The sales were up around 7%, stood at 68.2 million tons, and the production stood at 64.4 million tons, which was up around 7.5% on year-on-year basis. Moving on, MOIL will be focused as companies increasing its price of manganese ore from 35 to 35% starting from June 1, and REC will be in focus as companies appointed Harsh Baweja as its CFO and also approved fundraising plans of 1.45 lakh crores via bonds. Lastly, keep your eyes on Ahluwalia Contracts, as company has secured 2 projects worth around 2,245 crores, and Welspun Corp. The company has received order from Aramco for the supplying of steel pipes, and this order is worth around rupees 3,670 crores. So keep your eyes on this all stocks.
So we'll keep an eye on all of those counters then, but market honchos largely focused on policy continuity leading to a potential rally post June 4th. Let's also understand the rationale with the likes of Mark Mobius, Dinshaw Irani as well as Vikas Khemani, and also listen into what they had to say then about the PSU pack and themes that they're keeping on their radar as well. Listen in.
Modi, of course, will still be pretty much in control, and he'll be able to continue this incredible growth program that he has for the country. Definitely be Modi again. The question is whether he can have control of Congress and have the ability to change the Constitution. That's the big question mark. And of course, if that does not happen, then there might be some disappointment. But I think, it's already being fed into the price.
We just need the government to continue. It didn't matter whether they came in with a 300 plus or a 400 plus kind of majority. All we needed was them to continue. And the continuity is what we were looking forward to. And I think more or less that is a given. We can keep arguing about the 2/3 majority and all that, but still, I think that is a given.
And I do believe that, we are in one of the best wealth creation cycle, and hence that should continue. Any continuity will only further that confidence.
The PSU space that we are in is mainly the oil and gas space. Some of the banks are there with us. And obviously some of the defense players are there with us in the PSU space. So I think even if there was some amount of uncertainty, these spaces are quite sanguine. Probably oil and gas would have been a question mark. But still we believe that given that the budget is going to be in July, there's still a lot of steam left. Even after the election results are out, I think the run-up to the budget should be good.
PSU banks is something we have been quite positive and we continue to remain positive. But let's say for the example, oil and marketing company, we have not been at all buying because the governance is not fixed. It's a lot more political. So government interference keeps on happening every time price of oil goes up and down. So we basically prefer where there's a tailwind of the sector, when there's a least government policy interference is happening, it's more run by the individual banks, individual organization, then the leadership of those organization has to be good.
You could find margin of safety in BFSI, given that earnings growth has been pretty strong. You could find margin of safety even in the technology pack if earnings recovery were to come in the second half of this year. But there could be a significant margin of safety in public sector units, given the growth trajectory on many of these monopolistic sectors like power, logistics, oil marketing companies, commodities. You could see distinct value being, trading at single-digit P multiples.
The sector leadership, in my opinion, will continue to be capital goods, infrastructure, defense, and those kind of names, as opposed to the other parts. The other parts, of course, we would do cherry picking with regards to where valuations are favorable, and if there is a turn of fundamentals, whether it is IT, whether it is FMCG, and whatnot. But directionally speaking, over the next 4 or 5 years, the sector leadership is likely to be infra, capital goods and whatnot, capital goods and construction, as long as there is policy continuity on the top, which is what's the basis assumption in all of this.
When the private sector came,
post-election is going to be a very interesting time. And if markets have corrected by 10-15%, I would think let the market correct by another 10%. So that absolutely is like it's a ground zero. And then we start with the new administration. And new thought process, new 100 days, new ambitions of the government, new ministers, and they will come and run for their targets and things like that. And then the new energy in the economy will also come. So at that point of time, markets will also accelerate to the new highs. Most of the people in the market, they should also get reconciled to 10-15% correction. And once that is there, you're reconciled to that, and you buy the good stuff, high ROE, high growth, at reasonable P, you do well.
There's no question there will be a correction. The market has gone up so far and so fast and for such a long time. We are due for a correction, and a correction of 15 to 20% is normal. This may be on the back of the election. If there's disappointment about what Modi's election results are, you may see correction. But that does not deter from the overall growth that we're seeing in India and the recovery. So if there's such a correction, it would be a great time to be buying.
The big story is that the importance of the FI flows have waned quite significantly and will continue to do so. And while they may have cut their shorts, it doesn't mean much. In fact, if anything, I feel the market structure is favoring a correction immediately post the elections when the event is out of the way, because every scenario has been factored into this run-up. And while there is no one who really has a clue on the numbers as complex as they are, in terms of making a guess. My own assessment is that if continuity is the way forward after the elections, then we'll probably have some kind of a correction.
All right, well, that's a lowdown on the who's who of the markets giving their predictions on what's likely to happen after the poll outcome tomorrow. But let's also shift focus away from everything that's been happening in the markets, and let's also take a look at what's happening generally in general news amid severe water crisis. A vacation bench of the Supreme Court is all set to hear the AAP-led Delhi government's plea seeking direction to Haryana to release surplus water coming in from Himachal. Remember, AAP had accused the BJP government in Haryana of withholding Delhi's share of water, leading to acute water shortages in the national capital. Let's keep it going, and the price of Amul milk across all variants has been hiked by 2 rupees per litre. The price increase will be effective starting today, and according to the Gujarat Cooperative Milk Marketing Federation, the prices of Amul milk have increased due to the increase in the overall cost of operation as well as production.
Alright, then moving on, travelling on national highways is set to get costlier as the National Highways Authority of India NHAI has decided to increase the charges by an average of 5%. The yearly revision of highway user fee, which was initially scheduled to take effect on April 1st, was postponed due to the Lok Sabha elections. So that's the update coming in as far as highways are concerned. Moving on then, West Indies survived a big scare as they defeated Papua New Guinea by 5 wickets in the opening Group C match of 2024 T20 World Cup. Defending just 136, they gave West Indies a scare after reducing them to 97 for 5 before Roston Chase played an ice cool 42 to take the Windies home.
Alright, well, and here's your chance to take advantage of the market swings. Kunal Bothra and Sanjeev Bhasin will share their stock strategies to help you navigate and make the most of the volatility today. Which stocks are on their buy and sell list, and if they need to fall or rise by 5%. Stay tuned to ET Now all through the day for the best pole positions.
Alright then, with that we're completely timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together, thank you so much for tuning in. But you don't go anywhere because the market takes all of the action forward.